Hey everyone, Steve here from 11ish, a channel where we talk about lucrative but sound investment opportunities and financial strategies. You guys have been providing really great feedback and helping this channel grow. You can't imagine how thankful I am. Therefore, I want to always make sure that I dedicate some time to talk about the stocks and investment opportunities that you guys request. In this video, we're going to talk about a pharma company that just IPO'd. It was a request by one of our members, Hong Lin, and we're going to talk about why this stock is interesting right now, why there might be an investment opportunity for the next 3 to 6 months, what are the potential risks, how it might fit in your portfolio. If this is the type of content you've been looking for, please hit the like button and let's get started. This company is really interesting. The name says it all. Their motto is transforming the funding of life sciences through collaborative capital. Royalty Pharma operates like a pharmaceutical VC. I think it's incredibly interesting. And they make money in 3 ways, all through royalty. The first way is by acquiring products outright after they've been FDA approved. So a company might have a product that's FDA approved and they want some liquidity so that they can develop the next drug or whatever the reason might be, right? Royalty Pharma is there to acquire that product. The second way is through merger and acquisition. So it has nothing to do with Royalty Pharma acquiring a company per se, but it has to do with a bigger company acquiring a smaller one for key assets. When that happens, there might be supplementary assets that are not important to the acquiring company, so therefore they're going to sell it. Royalty Pharma is going to calculate the risks, the gains, buy those tangential assets, and bank. The third way, which I think is the most interesting way, is by funding clinical trials strategically. I think this is the most interesting bit about their business because it is operating most like a late stage VC. Before I tell you how that works, let me tell you how clinical trials work. There usually are 4 stages. You have the first 2 phases where you're basically testing for safety and efficacy in a much smaller environment. That usually takes months to multiple years. Then there's phase 3, where usually you need to acquire thousands of patients to test on. It also takes a lot of time. When there's a lot more patients and a lot more time, it gets really expensive, right? And then you have the FDA approval period where you need to make sure all the numbers add up. That also takes time and risk. If you are Royalty Pharma, you're basically investing during the phase 3 trial where a lot of the risks are accounted for because only about 30% of the drug researches even reaches phase 3. So they're eliminating a huge amount of risk, right? And then at the same time, they have the ability to look at the data to figure out what is most likely and what's most valuable in order for them to figure out whether they want to invest in the phase 3, right? If they fund the phase 3 and get the FDA approved, then they will get a royalty off of that product. It is based on their site, usually in the single digits, low to medium, depending on the size of the opportunity and whatnot. But that has generated them quite a portfolio. You can actually go to their site and see all of the drugs that they get royalty off of. Royalty Pharma has been very transparent in their portfolio in demonstrating both public institutions and private companies like Pfizer, for example, hospitals, research hospitals. All of them leverage Royalty Pharma to get products onto the market in a more cost-effective way, and then Royalty Pharma collects royalty off of that opportunity, right? They're doing a great service for the biotech community, and they also are making a shit ton of money. Therefore, it's an opportunity for investors to make money as well. However, to train yourself to be an informed investor, you have to look for cons. And I think there are 2 major ones right now. I think there's a reason why they're going public. They could have stayed private, especially when this company's been around 1996. It makes me wonder why they're going public right now. Because yes, a recession is coming, and if a company is going to go public, they should definitely go public before the recession happens. Because the recession will take 3, 4, 5 years. You're going to be stuck, right? This is one of the reasons why Airbnb is going public. That being said, they went through like 2 recessions already because the company's been around since the 90s, right? So again, I think there's a reason why they're going public right now. I'm not quite sure yet. We haven't seen their first earnings report yet, so therefore I'm a little hesitant on that front. Secondly, I wonder how fast this business actually grows, because if you invest from phase 3, you're essentially reducing your working capital's timeline by half, which is super exciting. But that's still years, best case months, right? How often does that happen? How often do companies actually ask them for help? Those are all open questions, right? If they have a super loaded pipeline of a ton of companies looking for help, then I think this will be a super, super lucrative investment. However, if that's not the case, if they're just making a shit ton of money, when an opportunity comes, then they go for it, taking their sweet time, then yes, this business is great, but it's gonna be boring as hell. Similarly, I wonder what their hit rate is in terms of launching successful opportunities. Not necessarily just getting a product FDA approved, but how many of them are winners? Because a product during phase 3 where they start funding needs to pass FDA approval, and also in order for it to be lucrative, almost always it needs to also be picked up by the insurance company. If it's not medically insured, then from my experience of investing in pharma, that drug is not going to do very well. So therefore, I wonder how fast they're going to generate new revenue, how big is their pipeline, how juicy is it, and based on their analysis of figuring out winners and actually having winners approach them, what is their success rate? I think those are some really big questions that I would love to know the answer to before I invest a lot more money into the stock. Is it a safe stock to invest in? I think absolutely. Pharmaceutical companies are very recession resistant, so they are actually a more interesting investment opportunity when we know a recession is nearby. So worst case scenario, I think we're going to end up holding the stock for a long time and not see much interesting happen, but it's a lot more interesting and a lot safer than holding a lot of the other choices that we may have. Again, because the earnings haven't been reported yet, there is no benchmark in terms of whether this current stock price is worthwhile. And so I think Jim Cramer said it best. Put a little bit in if you believe in this company and cause, but wait because most likely a correction will happen. On a similar note, Jim Cramer actually interviewed their CEO, and I highly recommend it. I'll link it below so you can check it out. It's very, very insightful. I like the way the CEO speaks. He seems like the type of person that has a good head on his shoulders, knows the strategy. When asked the tough questions, he has the good answers. He seems like the right leadership to invest in if we're talking about long-term investment opportunities. All right, guys, I hope you found this content useful. Hong Lin, thanks again for making the suggestion. And for the rest of y'all, if you have any questions or suggestions, please hit the subscribe button and leave a comment. I will get to you, cue up that grenade, and we're going to talk about this so that we can all grow together, learn interesting things, make money. Thanks for watching, and I look forward to working with you next time. I'm a simple man, don't want a complication.